Holy shit. Do you believe these past 2 days? I cannot believe what I'm seeing, man. I have not seen anything like this since I entered the market. Um, I mean, this is just absurd, man. Just absurd. And there's really nothing going on. It's not like we're in a pandemic, shutting down the economy. There's no Taliban attacks. No Al Qaeda. Crazy, 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 crazy. And I'll tell you what, 4505, man. I think we're at 4505 before the end of the month. Yeah, 4,505, I say, plus or minus by the end of the month. But okay, so what I have up here, actually, let's get rid of that. Well, you know what? Let's take a look at this, man. First of all, I got to say that I'm neutral today. We got non-farm payroll coming out at 8:30. We'll see what kind of effect that has. After that move up and that aggressive move down, I'm neutral on the market right now, and I'll show you why. First, let's take a look right here. What does this look like to you? This aggressive move down, and then this little business we got going on over here. Looks kind of like a head and shoulders to me. But I mean, it's kind of extreme, man. I mean, you got a couple hundred points. But I think if we break that 4305 move, we're going up at least another 200 points from there. So this is a really good resistance. We'll call it 4303, 4305, that arena right there. I mean, you could go check out the highs. And this is on the futures, and it is the 240 chart, 240-minute chart. So yeah, man, and I mean, and look at the trend. Look at the momentum trend. It's up. Yo, I don't know. I don't know. I don't know. I got to be neutral. I got to be neutral pending a break of the low or a break of the high. Maybe I could see another pattern, but 3,800 possible. I mean, what's going on is just absurd and unfounded. Maybe all this speculative fear that people have about the economy. I don't know. I don't know. I don't know. But you know what? Over the next couple of weeks, things are going to quiet down. There's going to be no catalyst to move the market around. We're not going to hear from the Fed for a while. There are really no economic reports coming out that are going to influence the market too much. So it should be a quiet time over the next 2 weeks. And I'm thinking that might be a move for the market to float up. I'm hoping. I'm hoping and praying, but we'll see what happens today when non-farm payroll comes out. So let's take a look at the S&P, man. Very interesting, very very interesting. Here it is for the day, right? And we keep seeing. Here's why I'm neutral. We keep tagging this low and then wicking right off of it, wicking right off of it. You know what I'm saying? I mean, if we closed on that low, then I'd be a little sketchy. And I was watching this right here on my momentum, and this is just a Mac Daddy, and I have my own numbers in it. I think the standard is 12, 26, 16 or something like that. But I use a 532.5. It's a little more sensitive, and I'm accustomed to reading it like that. And I knew a few traders who did that and just introduced me to it, and I find it very accurate. But I mean, like I've always said, every indicator, I mean, is valuable. As long as you know how to read them, you're used to using them. There's no silver bullet. There's no magic bullet. It just gives you a little insight into the price action, which is what's important. So price action right here, bang, we hit this low, we wick off. We hit the low, we wick off. I'm hoping that's it, man. We built that low right there. So yesterday, I'm watching this. We've got this one green finger, and this baby kept going red. And basically, I say that's the bulls giving us the finger. If it gives us the finger, it's the bulls are walking away, and boom, the bulls give us the fingers, and the market's going to tank. And we just averted that, just a little bit. And nothing's a guarantee, man. This market can turn around and go down. And we got, a small green bar from yesterday. But if I saw that green finger, forget about it, man. I'd be pretty nervous today. It just tells me that the bears try to push that market down even more, and turn that momentum around, but they couldn't quite do it. But they may do it today, man. It looks like the Bulls have just backed away. They're just not around. Although maybe they didn't get involved yesterday because it's non-farm today. And yet, traders back off. So algorithms take over, and professional shorters take over, and and they could bully the market around a little bit. And so that's what I see, man. That's it. So we're gonna have to wait for the 8:30 non-farm report and watch the futures and see how it behaves. Nah, mean. And then if you take, wait, let me make sure I'm recording this. I don't pull the same stunt I did yesterday. We take a look at the 10-year on the daily, ripping, and look right there, we're getting that green finger. If we pull back today, we might get one green finger on the 10-year. And this baby, I mean, it's been running. I think it's entirely overvalued. I think we're due for a retrace. I think I keep saying that, but here, look at the momentum. The momentum just keeps fading off. This is pushing up, momentum's fading off. So this is indicative of what's going on in bonds. So right now, bonds are pushing down, but the momentum is fading off on the rundown. So I think bonds are going to turn around, have their bounce. I think the TNT, everything's setting up for a good recovery through May. I'm not saying the market it's over and the market's turning around. I think we got a whole summer of trouble coming on, but I think we might find a good bottom and then have a good trading range. And I'm hoping shit just stagnates for a while. With this big range too, we can make a lot of money trading. This big range right here on the S&P. And here you're pretty much looking at it right there. I mean, you could, even if we condense this a little bit, I mean, you could call the 818 to the say 40, fuck it, call it 4100, the 818 to the 4100. And that, if that's a trading range for the next 2 years, we're going to make a lot of money. It's just when you're in it and you don't know where it's going, that's where the problem is. And really, all of this is hitting long-term portfolios. If you're a trader, you're trading and you're out and you cash at the end of the day. And, it's the volatility that's making you money and you're cool with it. So even if it breaks there as a trader, you're gonna you're gonna go short, you're gonna play it down. But if we start ripping back and forth, then we could just find the mid range, which is probably right around. This is my 150-day moving average. It looks like it's in between these two red lines right here. And that's cool, man, because we play the break of that up here, and then when it hits here, we expect it to come down to the middle, and then it'll chop around, and when it breaks the middle, we'll trade it down to the lower end, and then it'll bounce around and it'll trade it back up to here, and then maybe come back down and then do a break. And we'll be making money left and right. So we're going to keep our eye on that. See how I'm hoping this is how it unfolds. Well, that was actually a 240. You can't do a 240. Yeah, I was trying to see if I could find that head and shoulders. You can't really do a 240 on this because you don't get that many hours of trading. I for a long-term daily effect, I would look at the 120, and even on the 120, it's not as obvious as the futures, but you do get the same resistance, right? You get that resistance right there, and then you could argue this is a head and shoulders. Really, this shoulder should be higher. But what's interesting is even in the S&P 500, this, shall we call it a shoulder, which is lower, the momentum is trending up. So we're getting a divergence. Fali? We're getting a divergence. Or actually, you could even call this a trend reversal right here, right? It's diverging from this low right here, but this looks like a trend reversal pattern because we have this low and then we have a higher low if we hold this on the 120s, and then the actual break would be the break of this resistance, right? So here we have a trend reversal on the 120, but the actual trigger would be here, or to be aggressive, you could take the entry right here. on the previous bar, or actually when the market opens, the entry will be on this bar. If we could break a high today of 152.72, I'm actually going to watch that. I am neutral on the market, but I'm going to look for that. I didn't look at the market this morning, so I'm kind of figuring this shit out as I talk to you. So I'm going to watch for that break above that and see if we can do that. And then, yeah, these highs right here are challenges, but we get past this one, and then we got nothing stopping us right there. So I don't know, maybe we have a crazy day to the upside. I just got very encouraged. I'll probably look at the futures and get discouraged. So I'm going to watch that. But this trend reversal with this resistance, if we get a trigger here, is consistent with the 240 on the futures, right? So if this holds, and even this is even lopsided, so we could even say that this is a trend reversal. So we're just going to watch the futures maybe for a break also. You'll probably see that break after the announcement if it's going to break. If not, we're going to go down. It's going to be another ugly, bloody day. And just when you can't take any more, there's probably a few more days of ugliness going on. And then, when you can't take any more and you close your position, you get out, that's when the market turns. So everybody just text me and let me know when you got out so I know when to get in. So that's it really. And Bitcoin, Bitcoin getting beaten. So we broke that trend line that we talked about. Here's our next target. And I'm not buying. I'm gonna buy once I hit that low right there. And this, I'm just putting this away and forgetting about it. Yeah, and it's inconsequential. I mean, it's de minimis in consideration to my trading money or my investing money. And that's just what this is right now. I mean, it's not an investing vehicle. I've said it all along. 34097. And this is why I've always said that, because when shit falls apart, everybody's going to be running. There's going to be a run on bank from this. I mean, it's a reality that there's going to be a digital currency. Bitcoin's got a foothold. It's all cool eventually. But it's such Dodge City right now that it's just not an investing vehicle. It's Vegas, baby. Vegas. But that's okay. Everything has its time. I mean, Tesla was Vegas at one time. Let's look at Coinbase too. Do I even have it up here? Yeah, here it is. Here it is. Yeah, it's getting beat down too. But look, you're getting those same changes in momentum. Although this is an oscillator, so it might just be rallying to zero, because it always moves to zero, forces its way to zero. So we're just going to have to watch and see what develops from it. To avoid that, use indicators that are based on, I think it's chandelier theory. So anywho, that's it, man. That's it. We're waiting for the Fed, not the Fed. We're waiting for non-farm payroll. That is at 8:30, and then we'll see what the markets do. And hey, what could I say? Good luck.